Well, hello again, Maverick Traders. It's Joe with you. Let's jump into our next candlestick pattern as we continue the series of candlesticks pattern. This is the hammer candle. Now, the hammer candle is one that I like. I like all of these patterns, but what's really neat about this, it's got the psychology of moving higher or price changing from bearish to bullish within its candlestick. And we just need some confirmation to the upside. As always, folks, we're going to jump into the Thomas Bulkowski website and nerd out a little bit, pull some of the statistics, and see what this has to give us. Now, the theoretical performance of the hammer candle is a bullish reversal, and that's kind of how I like to use it. Now, with all of these classes, folks, it depends on where this pattern develops and if it can confirm. It's a big deal. With the Bulkowski website, he just went through 100 trades and measured it after he identified the hammer candle, regardless if it was up, down, or sideways. I'm talking about the trend. So the tested performance, 60% of the time, it did reverse a move to the downside to a bullish move up. So whether that's a bull pullback or a bearish breakdown that hit a point and turned and moved higher, 60% of the time, which isn't a lot, it's above average, it's above par, right? This did turn the chart upward. Now, its frequency rank is 36 out of 103, so it's kind of common, right? 1 being the most frequent, 103 being the most rare, I should say. So this is up towards the middle area there. Now, the overall performance rank is 65 out of 103. You might think to yourself, well, geez, there's 36 on the frequency rank, but the overall performance is on the low side. Well, if you take a look at this next statistic, 88% of the time it meets its price target in a bull market or an up breakout. Now, this isn't necessarily that 60% of the time that it corrects, right? This is a bull market with an upward move. So this would be almost a continuation after you see that hammer candle. But it does reach its price target 88% of the time. That could be because of the range of the candle is a little bit smaller than some of the larger candlestick patterns or the multi-candle candlestick patterns. This is one single candlestick that can be exceeded. So 88% of the time, that should make sense because we're just trying to measure one candle. The best average move in 10 days and the best 10-day performance is what I think ruins the overall performance of this candle by itself. That's why we have a 65 out of 103 ranking. And the reason being is because 10 days after this candlestick is identified, it's a bear market, bear breakdown. It doesn't pivot at all the time. It usually continues actually lower. So down 4.12% after it's identified is the best average move, and then the best 10-day performance rank is going to be at 48. So right in the middle, and that's also a bear market down breakout. So as you can see, confirmation is going to be very big on the hammer candle itself. Also, where it falls within a trend after a pullback, bouncing off of a support level, things of that nature are going to be huge when it comes to using this to our advantage. So it's not the best. Now let me give you an example of it. This is the situation we want to use it for. 60% of the time it will reverse. Now this hammer candle does not have to be green. It can be red. The idea behind it, folks, is remember we want to see the body or the shadow, the lower shadow, twice as big as the body. So you got to fit maybe 2 or 3 bodies in there, and then you know you've got yourself a hammer candle. I'm also fine with an upper shadow, folks. Let me go ahead and just kind of draw one. I know it's blue, but bear with me. If it has a little bit of a top, something about this size, I'm totally fine with that. If it starts to get a little bit longer, like this area here, then what we don't have is a hammer candle. Now, a true hammer candle has 0 shadow, but you can have variations of a hammer candle, and I like to take it a step further, folks, because let's say that the body isn't as big. Maybe the body's only half the size. That's still a hammer candle. Or the shadow on the bottom's a lot longer. That's still fine. Where I will allow this personally is if it is at a pivot point, like this example in front of us. If it has come down and it's hit support or a moving average, or it's done maybe a Fibonacci extension retracement, a certain percentage you're looking for, it increases the probability of pivoting or turning around. So I'm willing to have kind of I don't want to call it an ugly hammer, but a variation of it. I could have a little bit of a high up there, something like this, I'm totally fine with that. I can have it a little longer, a little smaller body. That's totally fine. And that's because where this develops is more important than just having a pure hammer. And that's kind of one thing that the Bukowski website doesn't teach. You guys have been here with me a long enough time on the series to realize where these happen really will add to our probabilities and percentages. So, best setup conditions, hammer candle wise, is going to be an uptrending chart. What we're looking for specifically is after a bull pullback or some sort of retracement to a support level or previous high, right? So it takes a little bit more charting in this to really acknowledge the hammer candle. It's got to be in the midst of a pivot point to the downside in an uptrending chart, preferably, right? This is the best conditions. Confirmation needs to be above the hammer candle's high or its body, depending on the type of hammer candle you're looking at. Now this is mid-level frequency, but it does have a high level of a target percentage. 88% of the time this thing can turn right around after confirmation and hit that target. Now I'd like to keep these a little longer. We're going to go out and take a look at a couple of examples that we can kind of find, and we'll see if indeed we can keep these 10 days or less. Probably going to be best in the shorter time because the mid-level frequency and the high percentage of reaching its target. This might be something that we might get only 3 to 5 days out of based on Bukowski's 10-day performance, where it actually turned right around and went against us, or I should say negative. So let's go out and take a look at an example, see if we can't find the hammer candle. All right, so let's jump straight into this chart here, and I'm just going to start moving this thing forward. And let's see, well, first of all, before I get going, let's see if we can identify a hammer candle in front of us. Now here's an example that I thought was pretty interesting at first, is right here. So here we have, I would call a hammer candle. Now take a look at the size. This body's super small, and it does have a little bit of a top there. Now there are different types of dojis, referred to as dragonfly doji. That's going to be very tight hammer with a loss of a body. They are going to basically perform the same way. It's just how much of the body is left. The psychology behind this, folks, since I have the chart, is it came all the way down to this point sometime during the candle's period. In this case, it's a day. But the bulls took over and shot it all the way back up to this upper range is where it closed. So the idea is, even though it did have a pretty good move to the downside, that downside was not sustained. It was turned right around. Either the bears stopped selling or the bulls stepped in and pushed this to close above. In this case, since it is green, it's open. So it's this, hey, we just climbed all the way back up to the top there, and we'll see where we go from there. Okay, so let's take a look at what this chart has to offer. I'm just going to move forward a little bit here and see if we can't find ourselves another hammer candle. As I was moving forward, folks, I didn't see any of the pullback that I wanted to see because remember, 60% of the time, this will confirm a reversal from a bearish pullback. So I'm already looking for a pattern, not so much the candle. However, I figured I would stop and we'd talk about, hey, take a look at this, folks. That is a hammer candle right there. If I could draw a little bit better of a line. That doesn't mean a hill of beans to me, and the reason being is because it isn't in a pullback. This is actually in a continuation of an up move or consolidation before this candle actually hits. So it really doesn't give me anything to get excited about. Now, if you take a look at the follow through, this has definitely gone higher. And we can actually click a few more buttons to see how much higher it actually goes. It looks like it's still moving up from there. So this is a pretty good continuation if you wanted to use the hammer candle as a continuation pattern, which we don't. Continuing to move along here. Aha! Looks like we found ourselves another hammer candle. Let's go ahead and I can identify this by giving it a little bit of circle. This is our hammer right here. And what I like about this hammer versus the others that we've talked about is this is actually moving lower. So depending on what we're looking at, maybe a support level all the way back in this area, that could be a pivot point. See, so these are the things I try to identify when it comes to technical analysis and charting, not just the candlestick. But combining the two, I've got a pretty good probability of this reversing. Remember, if they are in this situation, 60% of the time they will reverse. So this is something that I might look to purchase. Now let's see what it does. So let's move on to the next couple of candlesticks here and see if it does confirm. There we go. So it pops up. It did confirm. What's interesting about this, remember, 88% of the time it will hit its target, and this is pretty close. Let me go ahead and just grab my pin and we can do a quick measurement. It's going to be the range of the candle here added to the top. So if we take this range, and I don't have a little ruler here, and try to add it to this, let's see, I bet you we're probably just shy of it. How's that, folks? I'm trying to draw something pretty fair. So we're almost reaching its target. I do believe that this hammer candle is a little bit longer than the confirmation, so it's almost there. We'll see what happens up in the next couple of days. Now, based on its 10-day run average, this thing could roll over in the next 10 days. That's its average. So let's go ahead and take a couple of more days over and see what happens. That's not very good, is it? Good old engulfing candle, which is another one we will talk about. But moving over for the 10 days, looks like this did. How many days am I here? Let's go ahead and count. Got the confirmation day. So 1, 2, 3, 4, 5, 6, 7, 8. 2 more. 9, 10. Oh, there we go. So lo and behold, it did confirm. It hiccuped a little bit, right? We did get a couple of days that were kind of nasty, but over the 10-day run, it has definitely exceeded its target. Let me get that pin back out here and see what we're talking about. So this is the target of the range. You could see that we had, this is where we stopped. So that is definitely outside of that move. So this one worked out pretty good. Let's see if we can't find another example. Okay, so skipping ahead, I wanted to get into a scenario that I'm looking for with the bearish move to a support or a pivot point. It looks like we found that. Now we'll see if this one is going to follow through or if it's going to fail, but it's got to confirm first. So here is our hammer candle. Now this one does have a little bit of a shadow here, but you can see we are definitely within 2 to 3 times the body here in the wick to the downside. What I like about it is it's come from a pretty good down move here. You can see back in the past that is actually right around a support level. Doesn't mean this thing's going to turn around, but my probabilities state that if it does, it might be a trade that I'm looking to take. So let's go find out how this one plays itself out and see if it's an opportunity. So the next day, did we confirm above the previous day's high or the candle's high? And we did, and we just barely did. You can see that there's a line that's kind of automatically drawn on this, and it's above the high. So I'm not really excited, but technically, if I'm to do it consistently, this is B1 to jump into. And it continues up there. Looks like it turns around. This happened. So it did definitely hit its target. Let me go ahead and before I get too far down the line here, this is going to be its range. This is going to be one of this range above its self. I'm just going to go ahead and draw it. This is a little easier. I'm trying to get this as close as I can, and I think I drew this my target a little high, but it did. Remember, 88% of the time, it will exceed its range once it's confirmed, and it did. Only one day. Now that we're past that, let's count our days. Here we have the 1, here's 2, here's 3. Let's go ahead and erase those, and then I'll add 7 more, and we'll see where we end. All right, moving forward here. That's 3. Let's go 4, 5, 6, 7, 8, 9, 10. Now you can see that this was one that had the run to the downside. Even though we did have the confirmation, we had the confirmation of the move. We actually did hit the target or very close to it, but after that 10-day run, remember it was negative 4. I don't know exactly, 4.12, somewhere around there. Well, there it is. It actually turned around and failed. So maybe this was too big of a bearish move. Maybe this trend, if I was to look more left, wasn't up. So I like to see a stock that's uptrending. So this is indeed a pullback. This looks a little bit more than just a pullback. This could be a bearish breakdown with a continuation. Pretty interesting, right, guys? So you go out there, you trade these a bunch of times, and you can find out, how can I use this? How often does it hit? We know that if we just do the candlestick, we're not going to get anything advantageous unless we correlate it with our sector, the overall trend of the chart, things of that nature. All right, guys, Let's jump back up and do a quick review, and then I will cut you loose. So the pattern frequency, it's 36, it's mid-level. Even though the price target is 88%, that last example was great. It turned right around. It hit the price target in 2 days. If that's your target and you're pulling it off the table and you're looking for the next trade, that's great. But if you keep it longer than that, that 10-day run is not very good. So the pattern rank is low because of that. 65 out of 103. Tested performance 60% of the time in the bullish reversal. We saw that. Both those examples that we took a look at did confirm. One actually worked out pretty good in the long run. The other one didn't. But both of them did confirm, kind of giving us that 60% there. So short move after the confirmation on average, 10-day is downward. We did see that we got pretty much smashed on the second trade. The first one was pretty good. The 10 days did finish higher. But it's best to do it shorter term, maybe 3-4 days at most after it's continued or confirmed to make that trade. All right, guys, thanks so much for joining me. We'll see you next time. Bye, folks.